You're finally making money in your business and you're ready to take things to the next level. You know that cash flow is the lifeblood of a healthy business. But if you're being entirely honest with yourself, you're not exactly sure what you need to do to keep the money flowing consistently. Well, my friend, hang tight because in this episode of the Online Business Clinic, the place to be to build a profitable and portable business, we've got Andrea Jenson, Chief Financial Officer and founder of the Cash Flow CFO, stopping by to share with us her smart strategies on how exactly we can keep that cash flowing. So, Andrea, welcome to the show.
Hi, thank you. I'm really excited to be here today.
I'm excited to have you as well because your appearance on our show today is so timely. With everything changing so rapidly, I've got lots of clients that are really looking to pivot into online profits. And one of the scariest things for small business owners, especially those that are like, they've worked so hard to finally get some cash flow in their business. And that's great. And they know they want to make more, but if they're being honest, they get a little bit scared on what to do to really keep it flowing and make sure that they're setting up their spending strategy wisely. So if you could you go ahead and shine a light for us here and just tell us, what do we need to do?
Yeah, absolutely. That's such a great question. And you're right. It is super timely with, there's so much uncertainty right now with businesses being closed down and just the economy in general. So one of the very first things that business owners should be doing, whether they're online or offline, is getting a good, strong handle around their cash flow. So really looking at what's coming in and what's going out, looking at the timing of both of those things. And ideally, you want to speed up the cash coming into your business and slow down the cash going out of your business. And there's several different ways that you can do that. But the very first thing you should do is make sure you have everything, mapped out. So write down exactly what's coming in from which customers, what dollar amount, and by when, and confirm with them. It's always a good idea when there's uncertainty, in the air, to just reach out and make that extra connection with your clients and just, check in. How's everything going? Looks like, we've performed this service and we should be done at this date. And, I'll be sending you an invoice. And is there anything I can do to support you or help, whatever it may be, just make that personal connection, because that's going to, number one, give you that sense of security that, okay, things are good with them and their business. They're going to be able to pay that bill. And you're also going to just be top of mind for them when they get that in. They'll be like, oh yeah, I talked to her already. Let me send that payment off and be done with it. So that's the first thing that I would do, is to just get everything documented, make those extra touches to your clients and reassure yourself that things are good and the money is coming in as planned. And then do the exact same, but for the money that's going out of your business. So write down exactly what you have already committed to payment-wise, the dates, the amounts, who the vendors are, and look at different ways that you can either extend your credit terms. You can can I make a plan to pay maybe some partial payments? So you want to slow down the money going out of your business as much as possible so that you can work on that timing and make sure that your cash flow is synced up so you're not going to have any surprises.
Yes, you definitely do not want to have any surprises when it comes to creating a steady stream of cash flow for your business. And I think you bring up a really valid point. What you don't track won't grow. And as business owners, we're constantly striving to power up our profits, to really boost our business. And I think that I just want to reiterate what you said, start simply by having those conversations with the clients you have so far and just keep the conversation open. I know many of my clients get a little bit queasy when it comes to talking about money and invoices and things like that. But that's huge. Of course, we want to make more money. But in my opinion, as a former certified financial advisor myself, making more money is great, but it's really not about the increase. It's about how much you're able to save.
Mm-hmm. Absolutely.
So do you have any specific tools or systems and ways that you like to keep track of both your invoices and your expenditures?
Yeah, definitely. So You have to have some type of accounting software. That's the most important piece, because it's going to do a lot of the heavy lifting for you, if you will. So we recommend QuickBooks Online. It's very intuitive, it's easy to use, and you're able to access your data anywhere you have internet access, which is really important because, for a lot of today's entrepreneurs, they don't want to be tied down to a desk per se. They want to have that flexibility to travel and work from wherever. And so if you have the QuickBooks desktop version, that takes that out of, the possibility for you. So get the online version, get somebody that knows what they're doing with the software. That's really important also. That can help you. If you're going to do it yourself, that's okay if you're just starting off, but have somebody teach you to get the foundation right, to get your chart of accounts set up right, to get your report set up right, so that you're getting meaningful data out of all of the data input that's going in. That's really important. That should probably be the very first hire that you have in your business, is a bookkeeper. And it can be 2 hours a week, it could be 20 hours a week, whatever your business requires. But it's such an important piece because money affects every single decision that you make in your business, whether we realize it or not. It truly does. And without accurate data to make informed decisions, you're kind of just shooting in the dark, and you could be wasting a lot of money. And we don't want that for any of our business owners.
No, we certainly don't want to be wasting any money. And I'm with you there on QuickBooks. That's something that I use in my business, and it's something I encourage my clients to use as well. I get a lot of questions around it, though. If you could explain, what's the difference between a bookkeeper and a chief financial officer? What is it exactly a bookkeeper does, and how is that going to help me? What is it that QuickBooks can't do that a bookkeeper can do for me?
Yeah, that's a great question. So the way I like to explain it is, imagine that you're driving down the road in your car. Mm-hmm. Sitting in the back seat is your bookkeeper and your tax preparer. And they're looking out the rear view window and they're telling you where you went and how much you spent. Your CFO is sitting next to you, the business owner who's driving the car, and they're looking out the front windshield and they're telling you, here's what's coming up, here's how to plan, and here's how to be prepared. So while you need everybody in the car, they all have very, very different roles and different skill sets and training. One of the biggest questions and frustrations that we hear from business owners is, I have a tax preparer. I only talk to them once or twice a year, and I keep asking them, am I doing things right? Does my business look healthy? And they just kind of push me off and maybe spend 10 minutes talking about something on the phone, and I don't get my answers. And that's because that's not their skill set. They're trained in tax law, and their job is to save you money on taxes, not help you manage the finances and grow your business strategically.
Okay, so to help you manage your finances and to grow your business strategically, that would be the role of a CFO?
Mm-hmm. Yep, absolutely.
I love the analogy of the car. I've never heard it put that way, and it's so smart, because I know as startup online entrepreneurs, sometimes it can be overwhelming. It's, you wear multiple hats. A lot of times we start off as solo entrepreneurs, and then we're like, where is that first hire?
Yeah.
So what I hear you saying, your recommendation would be QuickBooks and starting with a bookkeeper.
Mm-hmm.
Okay, fantastic.
Yes.
What you talk a lot about, stopping money leaks. Can you expand upon that a little bit? And what does that mean? And how do we find those in our business?
Yeah, absolutely. So money leaks can show up in all kinds of ways. And typically, when your business is smaller, you're going to have the time and the ability to keep your arms wrapped around everything. Mm-hmm. The money leaks really start to show up as your business grows and your revenue grows, because at that point, you're probably bringing on some team members. They might have their own budget that they manage, as far as maybe a marketing budget, or looking at, when should I hire my next staff? And so money leaks happen when, number one, you're not tracking every dollar that comes in and every dollar that goes out. Money leaks happen when you're not reviewing your financial statement. So you should be looking at so yes, it's great if you look at your P&L. That's definitely the first step. But you need to dig down into each of those expense accounts and look at what makes up that balance that you see the number on your P&L. So
for our newbies, I just want to add, P&L is code for profit and loss.
Yes, absolutely. Yeah. Thank you. Because a lot of times you'll sign up for a software subscription and forget to cancel it. And months will go by and you'll be like, oh, that's right, I don't even use that anymore. And I'm still paying at $50, $100 a month. That's a money leak right there. The other one is looking at your team. So depending on whether you're a product-based business or a service-based business, typically your team is going to be one of your biggest expenditures. And so looking at job costing to say, okay, if I sold a service, for example, for $1,000, my cost of goods sold should be somewhere between 40 and 50% of that sales price. Mm-hmm. So when we look at cost of goods sold, that is any expense that is directly incurred to deliver on that service.
Okay.
So if you're a coach, then that's going to be, if I sold a service, am I delivering it? That's my labor. Do I have a team member delivering it? That's their labor. Do I have a specific software that's required to deliver that? That's a cost of goods sold also. And so if you look at that and you make sure that you're watching that percentage really closely, you'll be able to tell a couple different things. One, if you can't stay within that 40 to 50%, your pricing is probably too low. You need to raise your prices. Or you need to be honest with yourself about the delivery of that service, and you need to make some adjustments to keep it within that range. So
yeah, that's fantastic. I just want to shine a light on something for my coaches and consultants out there who offer service-based businesses. Did you hear what Andrea said? Your labor, the hours that you're putting into it, that also counts. I think too often we discount ourselves as the creator, as that counts as a part of our expenditure.
Mm-hmm. Yeah. And the big problem with that too is that we don't want to be doing that forever, right? It might be okay to bootstrap it in the beginning and you're, delivering your services, but eventually you want somebody else to step into that role so that you can be a true owner and not an owner operator. Mm-hmm. And if you don't start by training your business in the beginning to record that actual expense, then you're going to have an inflated profit number. And when you do hire that person, all of a sudden it's going to be a real rip the Band-Aid off. Where'd all my profit go? Because your business, it wasn't tracking it all along like it should have been. So that's really important. Business owners, number one, pay yourself. Number two, count it where it really goes. Is it a cost of goods sold, or is what I'm doing more of a general and administrative expense? And either way, it needs to be properly accounted for.
Okay, because I'm assuming then when it's properly accounted for, that's where we're going to save on the back end when we talk to our tax advisor that once or twice a year.
Mm-hmm. Right? Yeah, so a couple things too, and it's also going to tell you the health of your business. So I gave you the percentage to cut the ballpark range for the cost of goods sold, but if we take it further down your P&L, your profit and loss statement, you should have your general and administrative expenses somewhere between 20 and 30%. And your marketing somewhere between 5 and 10%, and then the rest is profit. And we'll talk about the profit in a little bit, because when you see profit on your profit and loss statement, it doesn't necessarily mean that that's money sitting in your bank account. And we can go into more detail about that too, because that's a big one that owners get really confused on.
Yes, let's please do. Actually, I just had this conversation with two of my clients who just finalized their taxes, and we're like, oh, this is so frustrating. My statement says I have profit and there's no money there, and now I'm scrambling to get things taken care of. So yes, I would love to hear your take on that, Andrea, and whatever tidbits that you have to share with us.
Okay, perfect. So your profit and loss statement is recording the income that your business generates and the expenses that it's spending. Some of the expenses, which are, for example, if you have a loan that you're paying down, the principal payment does not go on your P&L. The interest expense does, but the principal does not. So there's only so many places your profit can be, and they're all going to be over on your balance sheet. So that's the second report that we all need to be looking at monthly. And your profit is either sitting in your checking account, up in your assets. If you have inventory, it's sitting in your inventory. If you owe money to somebody on a loan, so whether it's a line of credit, it's a business loan, it's a vehicle loan, whatever it is, that's where those payments aren't being accounted for in your profit number on your P&L. And also, if you have credit cards, that payment that you make, yes, the expenses are being recorded. Hopefully, they should be on your profit and loss statement. But when you actually make that payment, so say, for example, this is, 1 month I'm spending it, but I don't pay my bill till the next month or 30 days later, the cash isn't going to match up because it's a later expenditure. And then also distribution. So if you're pulling money out of your business as a business owner, say you're not taking a salary and you're pulling the money out to live off of, that's not going to be counted on your P&L either. So those are the big ones where your profit disappears and you don't realize it because they're all balance sheet activities that your cash is going out of your business, but it's not showing up on your P&L.
Ooh, okay. I'm not going to lie. My head is spinning a little bit. So I'm guessing, that some of our viewers are like, and listeners are like, yes. Okay. This is why I get it. This is probably why I should pay that $15 or $20 a month for that software and be hiring a bookkeeper. Because listen, for me anyway, former certified financial advisor here, I got way too many other things on my plate right now. I'd much rather delegate that. Cash flow is so important though. It is the lifeblood of our business. It does give us our health report, so to speak. And we all want to have healthy, thriving businesses. And I know you've got some really smart and tangible steps into really increasing that. And we talked about, taking a look at your expenditures and stopping the leaks there. What other steps or strategies might you have for us?
Yeah, definitely. So, the CFO's role really where the bookkeeper produces that financial statement, that's where the CFO begins. So we take that financial statement, we boil it down to what are the key performance indicators that are going to dictate what's showing up on these reports going forward. So we're now taking historical data and turning it into actionable steps that is going to dictate future data in our company. So we're looking at tracking sales conversion rates. We're looking at tracking number of leads that come into the business. We're looking at tracking what's happening when the money is coming into the business. Are we hitting those markers of those percentages? And what are the long-term goals of the business owner? So some people will come to us and say, I'd like to sell my business in 3 to 5 years. Okay, that's a different way that we approach it rather than I want to have a business that's employee managed and run, and I'm just getting that income coming in. So depending on what the business owner's goals are, we're going to look at, okay, how much money do you want to be pulling out of the business every year? Because we're in business, number one, to have a control over our earning potential. And number two, our business is a vehicle to fund our lifestyle. So it needs to be funding retirement, covering your living expenses, all the things. And if you don't start with that number first and build that into your business model, you're never going to get there. So that's like driving from San Diego to LA and ending up in Tijuana and going, how did I get here? Well, it's because you didn't look at the map, right? Yeah. Same thing with our business. We have to know what's our starting point and what in 1 year, what's our marker, 3 years, 5 years, and however far you want to go down the road. But it's really important to have that data and use that to plan and strategize on the business.
If I'm hearing everything correctly, my interpretation is that we first need to set a SMART goal, taking a look not only at the goals of our business, but the goals of our livelihood, and then reverse engineering the math on that to find what I call and teach finding your number in the circle, so that then you can go back and backtrack. Okay, if my goal, for example, is to make $100,000 within the next 12 months, and I know I want to keep X amount of dollars and I'm only willing to spend X amount of dollars on expenditures, I'm selling now I'm getting too complicated with it, me trying to simplify things. But let's just look to simplify things. You want to make $100,000 and you're selling your product for, I don't know, $1,000. Then you have to reverse engineer, okay, well, how many people do I need to make contact with in order to hit that sales goal?
Mm-hmm. Yeah, so
I'm trying to simplify it. I think I made it more challenging. But
no, that's okay. I would just add one layer in there. So if you know what you want your take home to be, and if you know that that's 20% of your sales, then do the math and back into what your total sales should be, and then that dollar amount, and then you say, okay, if I sell a unit for $1,000, how many units do I need to sell now? And then now you have some really big numbers that you can plug into this map that's going to tell you, number one, am I on track to hit that? Number two, are my margins the right way that I'm going to, at the end of the day, after all my expenses, have that profit that I'm taking out of the business?
100%. You got your CFO in the passenger seat, your bookkeeper, and your tax guy in the back, and you're on the road to making massive money. But you've got to have GPS coordinates to plug in, and that's where reverse engineering, that money map, that cash flow strategy comes into place. This is all
Absolutely.
making so much sense, Andrea.
Yeah,
Love it.
absolutely. Absolutely. And that's the beauty of companies like mine. We're fractional CFOs. So if you were to hire somebody in your business to be a CFO, you're looking at spending 300,000 a year. Okay,
This
that's
is
not
my next question. You're amazing. Keep going. Yes. Right, because so many of us, I mean, I started out as a solo entrepreneur. I've got a small team behind me, but very much fall into that small business category. And no, yes, someday I would love to have an official board, chief executive officer board, including my financial advisor. But $300,000 annually is what I'd be looking to spend. So, what were you saying?
yes. So that's really not attainable for a
No,
lot of businesses, right? So
starting out for
the
sure.
beauty of the service that we offer is we identified like, hey, there's a big gap in the market. The people that need this advice the most are the small businesses, and they can't get it. So that's why we said we're going to do fractional CFO. So for 1/10 of that price, you can bring somebody on like us that is going to give you this guidance to say, tell me what you want to achieve. I'll do all the number crunching for you and give you a management dashboard that will tell you exactly what numbers matter. What are your leading indicators to tell you, are you going to hit those goals? Yes or no? And then you as a business owner, that's where you get to play with the puzzle pieces and go, okay, well, if I change this and move this and do this, am I going to hit it? And then we'll go back and crunch the numbers and be like, now we're on track. So we make it really easy.
This sounds great. I want a management dashboard. That's fantastic. Okay, wonderful, Andrea. Before we tell everybody where they can go to find you so that they too can get their hands at a fraction of the cost, get that expert CFO advice and their own management dashboard, anything else you want to share with us? Anything that we must know about keeping that cash flow pumping?
What you measure matters and gets done, and that's what grows. And so measure everything. Measure your leads coming in. Measure, what is your customer acquisition cost? What is your cost per lead? What is, all of these numbers will just help make your job so much easier, because it takes you from making decisions from like a gut feeling of like, I think I can afford that, to looking at the actual data being like, yep, pull the trigger, buy that, whatever it is, software, coaching program, whatever it is. You'll know if you can afford it, and it's not going to bite you in the butt 3 months down the road when your cash dips and you're struggling to make it. So
yes, no need to struggle to make it when you measure what matters, and that is your money. I was having this conversation the other day with my husband about millionaires and the way millionaires act. And I'm like, millionaires, they measure everything. Like, that's why they stay rich. That's why they're millionaires. And so if you're striving to become a millionaire as well, or a billionaire or beyond, whatever your goal is, you've got to measure it. Before we go, Andrea, would you mind sharing just real quickly, maybe one success story that you've had with a previous client who maybe just had messy money, but then were able to get their cash flowing once again?
yeah, absolutely. We've got lots of success stories of really just getting the right people in the right spots in the business. And so skill sets matter here. So a lot of business owners will bring in somebody that they like and they enjoy working with, but they don't have the skill set to do what they need to get done in the business. And so one of our really just recent success stories that we were talking with the client about is he has a service-based business, and he was bringing in probably, let's say he's doing about 500,000 a year. His accounts receivable, however, were ginormous. And so even though on the paper it said he was bringing in all this money, it wasn't being collected. So he didn't have the right systems to get it invoiced on time, to follow up with it, to collect it, make it easy to receive the money. That's really important. You want to make it as easy as possible for your clients to pay you. So we came in and set up all of his financial systems, all of the different accounts receivable, accounts payable, payroll. We did all the reporting for him, all the bookkeeping, all the CFO work. And his business has tripled in 12 months because of the clarity he had of where he was making money versus where he was losing money, versus he had the realization of, I actually like doing this service so much more, and they make me the same as the services I don't like. So he started doing more of what he really liked. And just by having that data and enjoying his business so much more now, because it wasn't this huge hassle, the money started flowing. The client, and every interaction was just so much nicer for him and easier, that his business, it was a natural progression to have that as the end result when you get your financial pillar in your business set up and you have the team that you enjoy working with to do it.
Very important, having a good team. I just feel like, I just want to take a big breath for him. That's so amazing. And for anyone who's listening, who's like, I can so relate to the wanting to make more money, but not having that dashboard, and just thinking about that small investment to bring in that very skilled expert to give you that dashboard so that you can triple. Did you guys hear that? That's triple your profits. That's incredible. Fantastic, Andrea. That's amazing. I'm so happy and grateful that you are doing the work that you're doing in this world and that you showed up to share with us here on the Online Business Clinic podcast. For everyone who is tuning in today, can you let them know where can they go to learn more about you and your company?
Absolutely. So if you go to our website, thecashflowcfo.com and /cash-now, the little dash, you can get your hands on our 6 tips to find hidden money in your business, which will enable you to hire somebody like us that can come in and really help give you that clarity, that peace of mind, that confidence. And if you're having cash flow issues right now because of the state of the world, and get this guide. It's going to help you put some actionable strategies in place that you'll see really quick results with. And hopefully it'll help you, alleviate some of that stress, and you'll be able to continue giving your gifts to the world and, serving more people.
Focus on giving your gifts to the world and serving more people. When there's a place everything just seems so out of control, the one thing you can control is your cash flow. So do what Andrea said, head to cashflowcfo.com /cash
now.
Yes. Guess what, guys? I'll put it on the show notes. So just scroll down into the description and you'll be able to get a direct link there. Okay, fantastic, Andrea. Thank you so much for being on the show today.
You're welcome. Thank you. I had a great time.
And for everyone who's tuned in, thank you for tuning in. Do please leave us a comment down below and let us know what was your biggest aha or takeaway. Be sure to subscribe to the show and tune in next week. We are here every single Monday, standing by to help you build a profitable and portable business. And of course, in the meantime, keep striving to master your mind and to live your legacy. Until next week, bye for now.